Hello, Pathfinder community. For those of you who have not had the opportunity to meet, my name is Katie Henderson, and I'm the Marketing Director here at Pathfinder Wealth Consulting. Part of my job is to ensure that we're meeting your needs in terms of content and frequency of communication. It is really important to us that we educate our clients on the basics of financial literacy and that we keep you up to date on any information that may affect your portfolio. Today, Pathfinder CEO and Wealth Advisor Jason Wheeler will be bringing you a short update on the markets with a focus on the recent buzz around GameStop and Reddit. As always, if you have any questions, please let us know. We are here to guide you forward. And with that, I will turn it over to Jason.
With concerns growing over a potential stock market bubble and, of course, the recent pullback last year, it seems another crisis has hit the headlines. A group of retail traders has come after the market itself. Specifically, these retail investors tried to beat Wall Street by trading up several stocks well beyond what the professionals think they are worth. In doing so, the headlines claim they have broken the market. Could that be true? Well, let's take a look at the details. So Redditors hacked the system. Yes, it did happen, and it happened here in two parts. First, a group of people on an online message board got together and all decided to buy a stock at the same time. More demand means a higher price, but that also means the market is working, not broken. Pumping a stock is something we have seen before, many times, usually in the context of a pump and dump scheme, when a group of buyers attempts to drive the price higher in order to sell out at a higher price. That practice is actually criminal. And although that doesn't necessarily seem to be the case this time, the technique itself is well known and has a long history. Second, because of the way they bought the stock, they used options. They were able to generate far more buying demand than their actual investment would warrant. The details are very technical, but briefly, when someone buys an option, the option seller buys some of the stock to limit their exposure. The more options, the more stock buying. The Redditors found a way to hack the system by generating more buying demand than their actual investments. But the underlying processes that drive this result are standard. A group of small investors using typical option markets does not necessarily indicate that the system itself is broken. And panic did ensue. Some of the headlines have talked about the damage to other market participants, notably hedge funds and some Wall Street banks. The damage, while real, is also part of the game. Hedge funds and banks routinely make mistakes and they suffer for it. Traders losing money is not a sign that the system is broken. Another source of worry is that somehow markets have become less reliable because of the price surges. Perhaps so, but the dot-com boom didn't destroy capital markets, and the distortions were much greater than they are now. Everything that is going on now has been seen before. The market is simply not broken. There is something different going on here, though, that is worth paying attention to. If you go to Reddit, the forum that was used in this situation, you do see the pump behavior from a pump and dump scheme. What you don't see, however, is the explicit profit motive, the dump. There's more, let's stick it to Wall Street, than there is, we're all going to be rich. Not that being rich is despised, quite the contrary, but this is more of a protest mob than a bank robbery. The bank may get smashed either way, but the motivation is certainly different this time. So what's happening now since this happened? Well, besides GameStop running up from $20 all the way up to $380 and now back down to $50, there is one reason this likely won't break the system. The protesters are acting within the system, and in many cases, they're benefiting from it. The second reason is that simply this is an easily solved problem. The first thing that will happen is that regulators and brokerage houses will be taking a much harder look at the internet as a source of market disruption. Fool me once, shame on you. Fool me twice, shame on me. The regulators and brokers won't get fooled again. Expect a crackdown in some form. The other thing that will likely change is option pricing. Much of the impact here comes from the ability of small investors to trade call options, which are bets that the stock prices will rise, and they're able to do that cheaply. The reason they have been cheap is because to the option makers, they have been relatively low risk. After 1987, the risk of a meltdown were much clearer, and put options, which are bets on stock prices going down, rose high to reflect those risks. Until now, the risk of a melt up seemed entirely theoretical. so market makers did not include them in their pricing. That practice will very likely change, making it much costlier for investors to use options to hack the prices. So, are there cracks in the market? Well, what we're seeing here is a new version of old patterns of events. We haven't seen it much in recent decades because regulators and brokers decided it wasn't going to be allowed. And yes, it is a problem, but it's certainly a fixable one. The market is not broken, but recent events do reveal some cracks. That's the good news. And by the way, the repair team is already planning the fix. So if you've got any questions, please let us know. And as always, we thank you for your trust, your confidence, and your loyalty to the Pathfinder team.